Welcome to the CFA Level 1 practice test. Domain, Financial Statement Analysis, Part 9. When should hypotheses about expected company performance ideally be formulated? A. Accurate, as this allows data processing to be guided by the hypotheses. B. Inaccurate, because hypotheses are typically developed during the analysis of processed data. C. Inaccurate, because hypotheses should be formulated only after the entire analysis is complete and conclusions are drawn. D. None of the above. Answer is B. Inaccurate, because hypotheses are typically developed during the analysis of processed data. How do inventory turnover ratios and gross profit margins compare between companies using LIFO and FIFO in rising cost conditions? A. Company L, LIFO, reports a lower inventory turnover and stable gross profit margin compared to Company F's slightly lower gross profit margin. B. Company L, LIFO, reports a higher inventory turnover and stable gross profit margin compared to Company F's slightly higher gross profit margin. C. Company L, LIFO, reports a higher inventory turnover and declining gross profit margin compared to Company F's stable gross profit margin. D. Not applicable. Answer is B. LIFO results in higher cost of sales matching recent costs, leading to a higher inventory turnover ratio and stable gross profit margin, while FIFO reports slightly higher gross profit. Which ratio best measures efficiency in using net current assets to generate revenue? A. Total asset turnover. B. Fixed asset turnover. C. Working capital turnover. D. None of the above. Answer is C. Working capital turnover specifically measures the effectiveness of net current assets minus liabilities, in generating revenue. What is Horizon Innovation's diluted EPS given net income and convertible preferred shares? A. $2.88. B. $2.61. C. $2.73. D. Not applicable. Answer is C. Diluted EPS equals $1,200,000 / 400,000 plus 40,000 equals $2.73, using the if converted method including conversion shares. What does an increase in a valuation allowance on deferred tax assets indicate? A. Future taxable income is expected to be insufficient to utilize deferred tax assets. B. Management has become more certain about realizing tax benefits. C. There is a decrease in the income tax expense reported currently. D. None of the above. Answer is A. An increased valuation allowance signals likely insufficient future taxable income to fully realize deferred tax assets. Which inventory method likely yields higher gross profit margin during rising inventory costs? A. LIFO. B. Weighted average cost. C. FIFO. D. Not applicable. Answer is C. FIFO matches older lower costs to sales, leading to lower COGS and higher gross profit margin. What is the likely impact if a company shifts from principal to agent sales but maintains gross profit? A. Decrease in reported revenue and increase in gross profit margin. B. Increase in reported revenue and decrease in gross profit margin. C. Decrease in reported revenue and decrease in net profit. D. None of the above. Answer is A. Agent sales recognize only commissions as revenue, lowering revenue but increasing gross profit margin if gross profit is constant. Which accounting choice reflects conservative accounting? A. Choosing FIFO during rising input prices. B. Using a shorter estimated useful life for a depreciable asset. C. Capitalizing an expenditure that could have been expensed. D. None of the above. Answer is B. Shorter useful life increases depreciation, reducing income and assets, representing conservative accounting. Failing to disclose a material inventory valuation method change violating CFA standards falls under which standard? A. Diligence and reasonable basis, standard V, A. B. Misrepresentation, standard I, C. C. Independence and objectivity, standard I, B. D. None of the above. Answer is B. Omission leading to misleading information breaches misrepresentation standard I, C. What do different common size cash flow statements indicate about method used for operating activities? A. Both used net revenue approach but different formats. B. First used indirect method and second used direct method. C. First used direct method and second used indirect method. D. Not applicable. Answer is C. Detailed inflows/outflows indicate direct method, starting with net income plus adjustments indicates indirect method. Thank you for watching. For more learning videos and tutorials, please subscribe to BSP Trainings.